Alright, welcome back to my YouTube channel at Illumination Hub NG. So don't forget to subscribe to the YouTube channel and also click on the notification bell so that you can be notified whenever I drop a new video. So alright, today we are still on IAS 16 on property, plant and equipment. Okay, now in the previous video we discussed what property, plants and equipment entails, and we also discussed how to recognize property, plant and equipment, based on the definition of IAS 16. And we also looked at how to recognize deferred payment, okay, deferred consideration, okay, when it comes to property, plant and equipment, whereby the transfer of cash never existed in the transaction when an organization tries to acquire an equipment. Okay, and we looked at the question where we're able to discount using the present value formula, which is equals to future value multiplied by 1 divided by bracket 1 plus r bracket close raised to power n. We also said that the same formula can be transposed into the present value equals to the future value multiplied by 1 multiplied by bracket 1 plus r bracket close raised to power minus n. So today we're going to be looking at recognizing the cost of property, plant and equipment in line with the provision of IAS 16. Okay, so there are times whereby when we acquire plant, okay, equipment, which are assets classified as assets, that is non-current asset. Okay, these assets, there are times whereby there may be transfer of properties, okay, with another property. What I mean here is that objects or assets may be transferred as a form of acquisition. So let me give you an example. For example, I want to acquire a mechanical generator, okay, from a client, and I decided to leave my motor van, my business motor van, to replace, okay, to use it to acquire the mechanical generator. You see that in this case there is no movement of any cash consideration, okay, but it is a form of what we call a barter trade. Okay, I'm using my motor van, my business motor van, in acquiring the mechanical from the client. And this, according to IAS 16, can only be recognized if we can measure the cost of the items being exchanged. That is, the cost being measured, okay, must be at fair value. Can these items be exchanged? Okay, it is something that we can put value on, or we can attach value to. Okay, so if for example, if the mechanical that I want to exchange for is worth 1.5 million, probably, just saying, from the client who want to sell the item, the property, the plant and equipment to me, okay, so it means that the motor van that I'm also leaving in exchange, okay, for the mechanical generator must be of the same value, meaning that it must be valued. Okay, so my motor van, which is 1.5 million, must be exchanged for the mechanical, meaning that the value by which I have exchanged for the mechanical is the value that will be recognized according to IAS 16. That is, the mechanical will be valued at 1.5 million, since the motor van that I'm using to acquire the mechanical is 1.5 million naira worth. Hope that is understood. So meaning that if my motor van that I'm using to exchange for the mechanical is 1.5 million, then it means that the mechanical that's being exchanged as the asset that I'm acquiring now will be carried at fair value, which is 1.5 million naira. So this is how we're going to recognize that in terms of asset acquired based on exchange. Okay, now also we need, in this video, we're going to be looking at the composition of property, plant and equipment cost. Okay, so when we talk about the cost of an asset, okay, we're talking about the initial purchase price of the asset. We're also talking about other costs that are related to the asset. For example, cost of carriage, okay, that is the cost used in transporting the asset from maybe the warehouse to the factory. Okay, also we have the cost of warehousing, probably. If we have a time where we have to what the cost of warehousing before we bring it down has been calculated with what with the cost of the asset. We have to recognize it. The cost of coupling the asset. In the case where we need to, maybe the assets have been broken down, so we need to what? We need to arrange the assets, couple them together, okay, before we can mount them in the factory to be used, okay. We have to also recognize that cost, okay. We also have other costs that are associated to the what? To the uh, equipment or asset that we have acquired that are directly related to what? To the asset, okay. And if we have the indirect asset, indirect costs that are what? That we can trace, okay, in relation to the asset, then we can also include this in the cost of the asset. So in the next video, we're going to be we're going to be talking extensively more on this, okay. But right now we're going to jump into the video, okay, to do some calculations in regards to recognition of cost, okay. How do you determine the cost of an asset, okay? Whenever you see a question, and how can you as an accountant, okay, be able to determine the cost of such an asset that you're going to carry in your book, okay? So let us do some workings, okay, and see how we can solve some questions, most especially this question that we have in icon park, okay. So let us do some calculations. Thank you very much. So the question says that a company purchased a large item of plant, okay, and we have the cost, highlighted below, where we have the list price of the machine. That is the price by which the item can be acquired in the market is 1 million naira. Okay. We also have the trade discount given, so we're giving a rebate, okay, on the item being purchased, which is the asset, okay. And also we have the delivery cost. The delivery cost in this case is what we call the carriage, okay. Transportation, you can also call it transportation cost, okay. We also have the installation cost. That is, now when we acquire this plant, okay, or machine, the cost of us having to install it, okay, in the factory, okay, for use was also included, which is what a direct cost, okay. We also have cost of preparing the site, okay, site preparation. We also have that cost, okay. So we're going to be making use of the cost of maybe clearing, arranging, so it's also part of the initial cost, okay. So we have the architect fee, okay, because we need someone that can help us to evaluate, okay, maybe probably the space we're going to be using, to install the machine, okay, is also included. We also have the administrative expenses, okay. Now the administrative expenses in this case has to do with those who are working in the offices, okay, and it does not have any direct relationship with the cost of the machine, okay, except the question states that there is an association with the plant and machinery being incurred, okay, or being procured. Sorry, being procured. So, and we also have the test run cost. Okay, test run cost means that the cost of having to test run the machine, okay, to see if the machine is working properly and can be made use of for further production within the organization, is also part of the initial cost. So we were told that the test run cost was to ensure that the asset was installed and working correctly. That is, items of inventory were produced during the test run. These are the sale value of 10,000 naira. Okay, that is, when we now test run the asset, it has a sales value of 10,000 naira. Okay, and the local government officials have granted the company a license to operate the asset. Okay, to operate the asset on condition that the company will remove the assets and return the site to its former condition at the end of the asset's life. The company has recognized a liability of 250,000 naira in respect of the expected clearance cost. Okay, so what we're saying is that the local government are giving us a mandate, okay, that at the end of the useful life of that asset, if the asset is going to use 5 years, okay, we have to uninstall this asset, okay, remove the asset from there, and we're going to incur a cost of 250,000 naira from the from removing the asset from that particular space, okay. So this also was a part of the cost to the organization. So we're going to look at do some workings here, so you can see the question on the screen. We're going to look at the calculation, okay, and solve this question. We have let's start working by saying notes to the account, notes, okay. So we want to determine the cost, okay, that is cost of plant. Okay, so the first one is what we call the list price. Okay, machine price. So we have the machine price. Okay, the machine price in naira, that is 1 million. Okay, so the machine price we have been given 1 million. Okay, so this is, let's call this number one. Okay, so we have a discount. Okay, we're giving a trade discount of 50,000. 50,000. So I don't know we did the initial price, okay, of the machine we reduced to 950,000. 950,000 because we are giving a discount on the machine. So number two, we have delivery cost. We're going to also consider number two, delivery cost. Delivery cost. Okay. The cost of delivery is 100,000. Okay. 100,000. That is the cost of transporting the machine to the warehouse. Number three, okay, we have installation cost. This is also a cost that we're going to recognize as part, okay, as part of the cost. Okay, so let's just do this like this. Let's have it closed. So we're also going to recognize this cost, installation cost of 125,000. 25,000. Okay, so we have number four. What's this? So we have number four. Number four, we have the cost of site preparation. Okay, that is preparing the site for installation of the asset. Okay, cost of site preparation. So cost of site preparation, we have 200,000. Okay, so we have 200,000. So that is 200,000. Okay, 200,000. 100,000. So let's close that. Let's close that too. So we also have number four. Number four, we have architect's fee. Number four, we have architect's fee. Architect's fee. Okay. So we have the architect's fee as 15,000 there, which we're also going to recognize as part of the PPE. Okay, we have Aki. So we have the architect's fee as 15,000 there. So the architect's fee is 15,000. So the response is slow, I think, due to the internet. Okay, architect's fee. So it's 50,000, 15,000 naira. Okay, 15,000. So we also have the administrative expenses as we have here. These expenses we are not going to recognize it because it is not directly related to the cost of the amount of procuring the plant. Okay, so we have number five. We have Testron. Number five, we have Testron. Okay, now to Testron this item, okay, we're going to incur a cost of 75,000 there. thousand. Okay. So we're told the question that after test running, we're going to have a sale of 10,000 naira immediately. So 10,000, we're going to reduce the test running because we have received 10,000 naira as consideration. Okay, after test running, so the balance that we're going to recognize is 65,000 naira. Okay, 5,000 naira. Okay. So we're told that local government officials have granted the company license to operate the assets on condition that the company will remove the assets. So the company has recognized the liability of 12,000 in respect of the expected clearance cost. So we have to recognize this also, clearance cost. The clearance cost, okay, that will give us 250,000 naira. So 250,000 naira. So at the end of the day, let us look at our total cost, okay, cost of plant. So we have number one, we have naira. Okay, so naira sign. Okay, we have machine price. Okay, we have how much left? We have 950,000. 50,000. Okay, we have delivery cost. Delivery cost. Okay, of 100,000. We also have installation cost of 125,000. Okay, we have cost of site preparation. Site preparation is 200,000 for preparing the site. We have architect's fee based on what we have on the screen, 15,000. Okay. We also have Testron. Testron is 65,000 balance. Okay, and we have clearing cost. Clearing that will give us 50,000. So we are going to add everything up to 50,000 to know the total cost of the machine. Okay, so let us go ahead and add up. Let's add up the machine to know the total cost that we have left. So we have 950,000 so we have 950,000, okay, plus 50,000 plus 100,000 plus 125,000 plus 200,000 plus 15,000 plus 65,000 plus 250,000. So at the end of the day, we have 1,705,000 as the total cost. Okay, 1,705,000. 1,705,000. Okay, so that is 1,705,000. So the total cost is 1,705,000 naira. So this thing did not, the graphic pen did not display due to the internet. Okay, so we have 1,000,000. Trying to write that out again. 1,705,000 naira. Okay, so the total cost is the addition of all the costs. Okay, after reduction through the discount being granted. Okay, and also we're able to make a sale after the test run. Okay, so we should further reduce the cost of the asset. Okay, so I don't know if we have 1,705,000. Okay, 1,705,000. 705,000. So that is the total cost of the property plant, the plant being procured. Okay, 705,000. So that is how you're going to determine, okay, how you're going to determine the cost of the property, plant, and equipment. Okay, so in this case, we have plant in the question 1,705,000. So this is how you're going to do your calculation in regards to how to determine the cost of plant. So thank you very much for your time, and I'll see you in the next video. Bye.